We've gotten a slightly better than expected earnings report from many important companies so far. So I want to bring in Stephen Whiting. He's at Citigroup. He's the Private Global Chief Investment Officer. And look, everybody says, oh, traders are relaxed, everybody's chilled. That makes me nervous. Does it make you nervous?
Well, look, when you just had this political event in Europe, which obviously affects more than the United Kingdom, and global markets didn't really overreact. They came together pretty fast. That obviously limits future returns when you go up in price. Now, I think that this year, though, Brexit has been sort of an overlay. And the great story has been that we've had remarkable returns in credit markets. 12% return in U.S. high yield year to date, closer to 8% in investment grade. That backdrop of a falling cost of capital for U.S. firms, a likely upturn in the petroleum sector, and earnings going up out in future quarters, it doesn't surprise me that this has been a better year than we started.
But do you pile into basic good quality stock names, or do you like the so-called high yield market, which is a little bit different here after assets had perhaps a bit hysterically sold off after the British exit from the European Union?
Well, if you mean high yield assets in terms of fixed income, it's further up in capital structure, and the yields are compensating. We've got to look. I mean, we've gone from the word yield to storage fee around most of the world, with 33% of world government bond markets with a negative yield, making the U.S. look like a high yield market by comparison. So what I think we should think about is that making dividends increasingly attractive. Now, certainly when markets rally, future returns are reduced, and there's no way around that. So our asset allocation is more cautious than it was 2 years ago. We're a little bit closer to neutral, but we still think we want to be fully invested in our earning income where we can.
Okay. Guess what, Stephen? You get to preside over the Bulls having downed a couple of cans of Red Bull and hitting another record on Wall Street.